The top 10% of apps grew 306%, and the bottom actually lost money, and the median app only grew 5.3%.
These markets are just sorting machines, and they're going to sort the fittest to the top and the least fit to the bottom. If you were the app that has the model that's the best, like, you can just get numbers that never were possible before, because that level of differentiation was never possible before.
But it is interesting that the top 25% of apps grew 80% year over year. And it's a bigger market, and there's more money. There are more apps making more money than ever. And as concentrated as it is in those top apps growing 300% year over year, 25% of apps growing 80% year over year, like, there's a lot of growth happening and a lot of apps making a lot of money. Hello, I'm your host, David Bernard. With me today, RevenueCat CEO, Jacob Biting. On the podcast, we discuss what the explosion in new apps means for the market, how the top 10% of apps grew 306%, while the median barely beat inflation, and why hard paywalls convert 5 times better than freemium. Hey, Jacob, it is your favorite time of the year again.
I didn't wear my traditional SOSA sweater. Around the house, we like to celebrate, everybody celebrates in special ways. But one of the things I like to do for SOSA is wear a special outfit. But I forgot today, unfortunately. But it is that time of year again. Number 4, we think. 2023 was the inaugural. And this is number 4. So
report is bigger and better than ever.
We say that every year, David. Is that really true?
No, it really is true.
Bigger is objective. Okay, so we can definitely keep adding pages.
More pages. I'd say better. We shared some really cool stuff in this year's report that we have never shared before. More breakdowns. We have P90 and P10 for pretty much every single chart, so you kind of see the distribution a little better.
I've been through the preprint. The preprint's pretty good. Like, I think we've done some visualization improvements. We have a bigger team working on it now. We also have an army of agents helping us with it this year, which definitely I think should hopefully deslopify, ironically, the content a little bit, and contractors and whatever. It's a big effort.
Bigger effort than ever for sure.
And there's content. We're not making... There's actual updates. Like, the world is changing. There is a state. It's not a permanent state of subscription apps. It's this year is different than the previous year. I was gonna say, if there ever was a time to chronicle 4 years of App Store history and numbers, it would have been 2023 to 2026, right? Or I guess 3 years. It's definitely an interesting time to be looking at the macros. So.
Yeah. Well, that's what I wanted to kick things off with. There will be a founder's letter in the report. Let's get a preview of, like, what are your thoughts on the market? And I'll chime in too, but like, the state of the app market in 2026 is weird.
See, that's a word. Well, I think it's hard to talk about apps without kind of zooming out to look at the broader, like, human macroeconomic condition right now and what's happening. Because, as we're talking, this is March 2026, the Opus 4.5, 4.6, and GPT 5.3 are a couple months old. We've had a huge step function in capabilities in those tools. Vibe coding has gone from being a sort of insider-y term to like something everybody's doing. It's become mainstream. This sounds like a hypothetical story I would make up about the future, but it's really happening. It's like almost everybody's vibe. And personally, from my experience, I've been dabbling in these vibe code tools. It was Cursor in 2024, and then I was playing with maybe like Codex and stuff and Claude Code over the summer last year. And then, this past winter, or like December, we started to see the birth of the Vibe Code platforms, like Vibe Code App and Rourke and Replit and like many others have started to get into mobile. And get
really good at it is the difference.
Yeah, well, that's the thing. It's like, I think, back in the summer when I tried some of these tools, it was like, this kind of works, but like, for somebody who'd built a lot of apps, I was like, I know I could do this better probably, and like, this is just kind of a frustrating and expensive experience. In 2025, at the beginning of 2026, it's like, I think I'd have a hard time competing with this tool, right? Even if there are some rough edges, and the trajectory is really clear. And so that news kind of got out. And so, this is just talking about the last 4 months. We've really seen this explosion. And that, is happening everywhere, I think, in the economy. But I think we've maybe seen it most acutely in the subscription app landscape. Like, RevenueCat personally, we've seen I don't even know what it is, like tripling in the number of apps getting submitted on an ongoing basis per day. And it's continuing to grow. This is as of the beginning of March 2026. Like it's, usually we would have these like step function, like COVID was a step function, or we'd have like a new iOS release sometimes would bump the like rate of app deployments. But like we've just been seeing this like steady acceleration of app deployments over the last few months. And it's directly downstream of this technology. And like now the question is, what does that do? We've been talking the AI story for a couple of years right now. ChatGPT's app came out in 2023. 2024 and 5 were the ramping years for these consumer AI apps, like not just ChatGPT, Suno, like anyone, 11 Labs, you can think of all these like great consumer AI brands, and then all the other like, long tail of like AI implementing tools. Those were all. Now we're seeing like just the total like flooding of the market with these new apps. And I think it adds some very interesting macroeconomic questions that we don't have that'll be in the 2027 report, I think, because in some degree it's going to be a supply and demand question. Like, it's obviously apps was constrained on supply for a very long time. Like it was expensive to make an app. It was hard to make an app. You had to have a good idea. You had to have somebody who could code it. You had to have the ability to deploy it. All of those costs have, I don't want to say disappeared, but have gone much, much, much lower. So we've suddenly seen a big supply shock, right? In a positive way, like a big dearth of apps of like rushing into the stores. But that doesn't mean the demand is necessarily there, right? So it's like, it's probably, at least for a short period, competing over fewer and fewer dollars, or not fewer dollars, but like an equal share of dollars. And so I think maybe some of this is being bore out in the data a little bit, but like, at least immediately there's going to be a knife fight over demand on the App Store as more and more apps compete over similar users.
It does feel like, though, in 2025, especially the AI apps gave people a reason to open their pocketbooks a little more. And like the Sensor Tower report came out and showed, and we talked about this. I talked about this with a partner from Andreessen Horowitz in one of the minisodes, that I was actually surprised at the Sensor Tower report that AI spending on AI generative apps increased like $3.5 billion last year, but there were a bunch of other categories, short video and entertainment and productivity and others, where it's like an increase of billions year over year of revenue. So it was pretty broad-based, and maybe there are more dollars, but it's like there are more dollars across way more apps.
Every year you're going to have a baseline. Whatever the GDP is should be your baseline, right? GDP growth is 5%. That should be our baseline, but the App Store's been doing 20 plus. So it's like there's always been a little bit more. I think it's likely that all of this increased supply will actually incent demand, right? It'll cause like more money to flow in. It's like, so it's not a fully fixed pie. It's like these things feed back on each other. But I do think it's like when you have a shock like this, where suddenly all these apps appear out of nowhere, the demand is going to take a while to actually come. And this is a prediction for the future, but I have a feeling there's going to be these like supply constraints get dropped, supply increases, it takes a while for demand. But like, I also am very bullish on demand. I mean, maybe we're seeing it. We haven't really seen the like AI productivity gains hit consumer spending yet, I don't think. We maybe in the most recent jobs, at least in the US, like not jobs report, productivity report, we had really strong productivity growth in the US in the last quarter of the year. And so I think everybody who's working in like knowledge work can see all these tools being applied to like, oh, I can suddenly do what I used to have to hire a contractor to do, or it would take 2 people to do. We were just talking about podcast prep and like all these things that are just now, all this white collar work that's now like automated. Like that should be, I mean, aside from the people who aren't getting hired yet anymore, like that will sort itself out hopefully. But like there'll be a lot of productivity leads to surplus, right? And so that surplus will get redistributed. And it's reasonable to think that some of that redistribution will go into essentially luxury goods, which are, for the most part, B2C apps would fall into like a luxury category, right? Things that people don't necessarily strictly need. That might take years yet. But I think it's a reason to be very bullish. Like even if short term, all this competition pours into the App Store and it's bloody and we're fighting and we're doing like competitive ad spend against each other and like is a little ugly for a little while, I think if AI does just like increase the baseline productivity of the world, I think it's reasonable to think that a lot of that excess, that surplus, will get recaptured in like luxury spending on software on the app stores. At least that's one bull case, right? The bear case being OpenAI becomes all the apps or whatever. Like there's only 3 apps in the future and none of us have a job. I think is the extreme bear case. I'm not super worried about that. I think there's actually data in here about outliers, and I think that outliers will continue to be a big thing, but I don't think that necessarily means like the middle and long tail are going to disappear. So
yeah, another Andreessen partner was actually on the 20 VC podcast, and I saw somebody talking about that today on Twitter, and their thesis is that the average person wants to be entertained and waste time, not be more productive, which is interesting. And,
I mean, why do we work to spend money on things we like, right? Which is like entertainment, whatever the thing that's driving us. We're a consumer economy, right? Like you might work in a B2B, whatever, but at the end of the day, consumers drive modern capitalist societies, right? And like that's typically, it's like having the bigger car and the bigger house, and like all of these things have driven a ton of economic growth. And I think B2C apps are like a great thing to sop up that surplus.
Yeah, exactly. And then thinking about, all these new apps, they are still competing with YouTube and TikTok, and it just for mind share, like, can you get somebody to close the TikTok app or link out from the TikTok app to your app and actually spend a few minutes there?
That's maybe the limiting factor on this going fully asymptotic, right? Like at some point, like you run out of, there's no more time and attention in a human's life, right?
Until the AI is doing all the work, and then all the free time then goes back to apps. That's you go. That's a bull case.
It's probably not going to look like, oh, people just work 30 hours now, but it might be, it's going to happen in subtle ways. I don't know how society's going to like adapt and like infuse this stuff, but I do think that there are reasons to believe we're going to have like echoing supply and demand shocks, like attention being a limited resource is one of them. Just like consumer lag on understanding these things, people just figuring out, everybody's vibe coding their little pet project app right now, which is cool. And it's like the ideas they already had. I think we're waiting on the next generation of ideas, which is like incorporating these models. They're vibe coded apps. Cal AI just sold for like $1 bajillion or whatever, if you believe Twitter. And like, that was an example of I want to say it's vibe coded, but it's like AI assisted development, certainly, and AI driven, and like there was certainly a lot there, but like it was a novel application of it to an old problem with using AI, right? And I don't think we've necessarily cracked all of those, like revisited every problem we've tried in software. And then also like the models are going to continue to improve, like their multimodal nature is going to get better. Like there's so much, if you just want to look at like the technology of these LLMs, like obviously their base intelligence of the LLM is getting better year over year. But I think a lot of the advancement we've seen alongside has just been like harness engineering, like Claude Code and Codex. Yeah, obviously they're powered by the models, but a lot of what makes them great is the harness. It's like, how do they read files? How do you interact with them? The ecosystem, right? And so that stuff isn't just pour more GPUs on it and make them go burr. Like you have to have engineers, they have to think about stuff. And so I think that same analogy too, we need to go through in a lot of apps where it's like, yes, we have this raw intelligence now. Yes, anybody can grab it off the shelf. The hard part is actually like, how do I apply this novelty to my problem? And that's not just like slap the sparkles on it, right? Don't get me wrong, slap the sparkles on it, do that too. But I think that's going to take time as people like acclimate to this technology, and we're still like early mid-cycle. I mean, yeah, on that stuff. Especially every year the models are different, right? So like imagine today's models, just imagine they had instantaneous voice and video interaction, right? That would change everything, right? Again, as they say on Twitter. So like there's just so many more advances that can happen within these base models that is going to continue to drive like more opportunities and stuff. So I still think we're pretty early.
We've talked a lot on this podcast and inside RevenueCat about the being bullish on the power of these mini supercomputers in our pocket to improve the human condition.
And now they're hooked up to actual supercomputers.
And yeah, right. And so like there's so many more problem spaces and ways that things can be solved with LLMs and going deeper in niches. Rick, our what is he now? Chief Revenue Officer, Marketing Officer, Chief Slop Officer,
yeah,
something like that.
Slop Lord.
He wrote a great piece, though, about just the bull case of like, being so many more people building apps, so many more apps being shipped, the power of LLMs to address problems in new ways, to go deeper into niches, go broader, like there's just going to be more software doing more for humans in the future. And I think that's a reason to be bullish. And I think a lot of that is going to happen on iPhones and Android devices.
You think so? That was going to be my question. Like I go back and forth. I think it's reasonable that the phone that will persist, right? It's hard to beat a tiny piece of magic glass has a massive supply chain built up behind it, and like has like a form factor that seems not super far from optimal, right? But also people are historically terrible at predicting the future. So like I'm not going to say that for sure.
I'll go out on a limb, and I've thought about this a lot and had this debate on Twitter various times over the years, but humans are inherently visual creatures. And this whole idea of like, oh, you're just going to wake up and like ask ChatGPT, hey, what's my calendar? And like, what's the weather look like? And all that. And then they're going to respond in voice, and you're just going to have all this like voice first communication and stuff. A picture is worth 1,000 words. That's a saying for a reason. And I think even if you're using voice to interact a lot, you're going to want some kind of display. So yes, maybe it does switch to like, glasses with a heads up display. But even then, like we're such a long way from that technology being good enough to have enough of an interface.
We haven't got a good enough prototype to even validate if it's a good thing.
Yeah. And then what do people spend most of their time doing anyway? They're on Instagram looking at pictures and videos and things like that.
We don't need that. You know what I mean? There's not much more bandwidth to be squeezed out of like a next form factor, right? The phone, yeah, it's a very high bandwidth. It's very good form factor. It's well engineered.
And if it does move to glasses, it will just be like an evolution of the phone in a way.
Look, you could have called in 2007 that you wouldn't have your Macs anymore, but I think pretty much everybody, with the exception of the like casual computer user who like is just browsing email, anybody who's like serious about compute, like in any way, like still uses a computer, right? And I think even most people still use a computer. I don't know what the penetration numbers are actually. I think I'm 80% bullish, but I do want to leave myself. Stranger things have happened, right? Stranger things have happened. Who knows? Maybe when the Meta glasses, the AR glasses get really good, we have a different opinion. But I don't know. There's not a strong track record right now of any of these devices going completely viral. But like you would say that too in 2005 about smartphones, right?
On Twitter, and kind of in the forefront of all this with like us tech nerds, it does seem like there's a lot of people who think it's going to happen a lot faster than it really is.
Is it the singularity?
No, more just that like, oh, the phone's going to be obsolete. Apps are going to be.
We'll call that the app developer singularity for all intents and purposes.
Like apps are dead is like a saying for the past like 15 years. It's like
yeah. Cursor's dead too. Like everybody thinks things are dead.
It's all going to happen much more slowly than you would think reading Twitter. I mean, even like I get on the hype train of like, oh, robots are going to be doing my laundry and dishes. It's like, yeah, eventually.
20 years. Yeah, I'm not going to make any bets on the state of subscription apps in 20, whatever that is, 56. No, what year? 46, 2046.
But we've got some time to keep building these little apps that help people.
Yeah. And I mean, like, look, I think developers are going to go where the economics are. People came to the App Store because it was the place to build where they could make money. Like that's not going to shift like completely overnight. And I still, I called it to somebody yesterday, the wet layer. Like I think there's going to always be a wet layer of software between like the human and the human. I just think there will be, because there's always going to be like that last 10% that a bot can't just like one shot, that like OpenAI doesn't quite understand natively in the model. There are just certain things where like even today that we could automate, but we don't. You know what I mean? Like because people want people in the loop, right? Like sales. Like, could you automate sale like completely? Yeah, like people try. It's like called self-serve, right? But there's still this like niche. I mean, you call it niche. It's like you're selling big ticket items. Like people want a wet layer. Like they want like a human in the loop, right? And it's not necessarily, doesn't even make it better, right? It just makes you feel. It's a feelings thing. I don't know what that looks like in software at scale, but it's plausible to think that there's at least a case. But I don't know, David. This could be a podcast by horseshoe salesman in 1910. Do you know what I mean? Like convinced, oh yeah, it's going to change, but it's not going to be that fast. These things are loud and noisy and they break down all the time. You know, talk about cars. So I always want to leave the possibility that we're just like out of step. And I think if anybody of our listeners are worried about it, well, could be worried about it. I mean, you're playing in a market. Like anytime you're in a market, you need to be smart and you need to be like eyes up and you need to be, if you want to win, and compete, like you have to be thinking a little bit ahead. So you should be trying these tools. You should be looking at what's going on in the market. You should be at the same time not losing the fundamentals, which is like helping customers achieve their goals and like talking to users and like all of these things. I think that's maybe one anti-pattern I've seen is like, and maybe the open call rage has been a thing. So it's like, oh, finally an AI is going to run my company, get me to 10K MRR, make no mistakes. And like, that's cool. There's definitely leverage in claw tool, like open claw and things like this. But I think the problem with free leverage is that everybody gets it, you know? Like, so it's like it very quickly, the alpha, like the advantage it gives you over the market is fleeting, right? So as long as you have some information that other people don't, you know, something that other people don't, that's how you get like lasting alpha and lasting competitiveness in the market. So anyway, well, it's been a great podcast, David. Thank you. We're done here.
We haven't even talked numbers.
Oh, right. The boring part. No, we numbers. We don't need to talk numbers now.
I know most of you who read the report are just going to skip over the methodology section, but the methodology section is bigger and better than ever before. And we actually explain in a lot more detail than we have in the past a lot of what went on behind the scenes to generate the numbers, what they mean and stuff like that. And so to better understand the report, spend a few minutes, read the methodology. I'll give a few highlights. In preparing the report, we didn't just look at all data. We did filter by apps that have active subscription revenue and meet minimum thresholds of installer revenue. So we did actually like lob off the kind of, I don't even know, I should have asked this. I don't know if it's like 10% or 25%, but like this is not data from like, you know, the app that's only gotten 10 installs and 1 subscriber or something like that.
We do some data preparation, certainly, that we think is appropriate to getting good signal.
And then for RevenueCat customers to understand, it is all fully anonymized and aggregated. So you're not going to see any individual's data in there. I've begged for years to figure out some way to include scatter plots because they're an easier way to like really understand distributions, but that would technically show individual user data. So we don't do scatter plots.
You could always do a distribution and then just make up a fake scatter plot. Sample Monte Carlo style. For 2027, we'll do that.
And then one interesting note this year, and definitely worth kind of like reading the description in more detail, but we separated AI apps from non-AI apps to just kind of get a sense for like what's going on in the market.
And we've emailed all of the investors of non-AI apps, so it's time to get with it. Get with the program.
And so just as an overview, whether an app uses AI or ML models for its primary value is kind of how we're trying to, and it is fairly subjective. This is not an objective measure. There's not like a checkbox people do in the app store of like, this is an AI app.
You know when you see it.
Yeah.
That sparkles. It costs more.
So that part is not, you know, perfect, but we did our best, and it is interesting to kind of make those comparisons. And some of the comparisons, and we'll talk about it, is that, you know, AI apps are commanding a much higher average revenue per user and things like that. So it is interesting to break it down by those. First chart. Apps are booming. We kind of already talked about this, but when you look at the chart, it's freaking wild. In 2022, in January of 2022, 2,000 new subscription apps were launched per month. In January 2026, 14,700, over 14,700.
So a 7x?
7x increase in the number of subscription apps shipped in a month.
That's a lot. I can concur. We are seeing a similar thing. Actually, and most of that growth is concentrated in the last 6 months, I think.
One thing to note real quick, too, this is data. These 2 slides we'll talk about at the start are actually from AppFigures data.
Yeah, so it's not our data.
This is the entire market. This is not just RevenueCat, although we're shipping in a large
very proportionate to that growth. I mean, we certainly like have tracked that curve. But yeah, I think, I mean, goes back to what we were just talking about, but like we're in unprecedented times, as they say. But yeah, again, it's just like the natural, what happens when you drop the cost of production massively, you get an oversupply, or I mean, they call it an oversupply. You get a massive supply boost on apps, which is great. I think we've seen Apple trying to catch up. Like app reviews been like bogged down. Like we've been obviously like trying to handle all the interest and demand. Interestingly, this is like B2B insider stuff, but like these new customers are easier than old. Like, you know why? They talk to the bot. The bot does everything. They don't even they got an API. Like, I don't even know we're a company, really. They just set the account up there. You know, the wet layer just does the OAuth thing, and like we're done. But like we have not seen an increase in our ticket volume, which has been interesting. I think also we've gotten just better. The product gets better, so tickets go down. But like, it's been really interesting.
We've done a lot of work, building the RevenueCat MCP, and like we put a lot of work into making it really easy for agents to do the implementation.
Like it's just in terms of like watching, like it's a good. It's not really relevant for this crowd, but like it's a good anecdote on like why the charts and ratios you got used to in the old world don't really apply, because it changes, things change. Like you wouldn't expect, like you think 1,000 more, 7x more users, 7 times more tickets. Nope, we've got 7 times more users per month and like same number of tickets. Just like, what? And then you're like, oh, it's because they're already talking to an AI. So they just keep talking to the AI and can solve 90% of those problems for them, which is great.
One thing I was surprised in these app figure numbers is that iOS now accounts for 77% of all new subscription app launches, and that's up from 67% in 2023. I would have thought that if you're vibe coding an app, why not just use React Native and launch it on both platforms? But apparently a lot of folks are just either going native or still just not bothering to launch on Android.
One thesis, I'm just riffing, but like could be the App Store schlep, like getting all your accounts approved, getting all your stuff in place, your bank accounts, has become a larger proportion of the painful part of building an app. So like only doing that on one store reduces, you don't have to also go do that on Play, right? So maybe that's part of it, right? As a ratio of total work, but also it's not a huge shift, like 66 to 70 or whatever it was.
Yeah. Gosh, I didn't even think about that, but no, that's a really good point. Like if you're vibe coding an app over a weekend and the agent's doing most of the work, if 2 hours of like figuring out how to create a Google Play account and like entering your social or setting up a company and getting your DUNS number, you got hung up on getting a DUNS number. I know.
Yeah, I'm still hung up. I'm 2 months into getting a new App Store account set up. Never gonna happen. I'm done. I'm retired.
It's like that. It's funny that just setting up an account is one of the harder things in building an app.
Yeah, this is the bottlenecks have shifted. So I don't know. It's interesting.
Another chart we included from App Figures is the share of revenue in 2025 from cohort of when the apps were built. Am I explaining that well? You want to take a step?
How old are the apps?
How old are the apps that are making money?
What changed?
Older apps are making most of the money. I mean, and it's not a change. It's just like a state of what's going on today. 69% of revenue in the app stores is coming from apps that were released before 2020.
I almost commented on the doc to be like, most of history is in the past. News at 11, right? It's like, of course. But like winners win, they compound. And I think I don't know if it's shifted precipitously. I think you could imagine a world where like, more revenue is coming from newer apps would be a story in terms of like a higher dynamicism in the app store, like just more tumult. But it's just like, come on, like you're not gonna just like the compounding advantage that Strava and Class Dojo is a good example maybe, and like I was also thinking Duolingo, like all these like, and then of course like all of the media companies,
Netflix and
it's like
and,
those are gonna just continue. They're not gonna shrink. You know what I mean? Most likely. They might trade a little bit back and forth. I would love to. We should go back and do SOSA. We could reproduce a SOSA 2020. Because, like, I think you'd probably see the same story. And be like, most of the apps were produced before 2015. It's like, yeah, of course.
Yeah, it just takes time to mature. The interesting thing on this chart, though, is that you do see 2022 and 2023. They kind of bucketed it weird, but 2020 to 2021 is 9% of the revenue. 2022 to 2023 is 14% of the revenue. So there was a bump in 2023. And I would imagine that's actually mostly ChatGPT, OpenAI.
Yeah, I mean, I don't know. It's App Figures numbers, right? So like 2023, yeah, it wasn't just ChatGPT. It was like, it's like all of these, like, in the next 10, a lot of these like foundation models launched their products in 2023, which it's probably what you're seeing there. It's interesting. That is interesting when you see like a displacement like that where the older cohort's actually producing a smaller share. That kind of really illustrates the shift that we've gone through.
And this is going to be really interesting to follow up on in the coming years, because this is the chart that's going to show you disruption. Like, are these newer cohorts of apps disrupting older apps and like taking bigger shares, growing faster, capturing wallet?
A supply demand question implies the demand is limited, right? Which if the demand's growing fast enough, everybody's growing and just at different rates. Yeah, it's hard to visualize.
So an interesting one to look at now, and I think it'll be even more fascinating in the next couple of years. But speaking of growing faster, that's the next thing I wanted to talk about. Was we have a chart in here talking about year over year growth in MRR. And this is fascinating. And it's just a perfect illustration of power laws, is that the top 10% of apps grew 306%, and the bottom actually lost money, and the median app only grew 5.3%. So
what was the GDP growth of the last year?
Yeah,
about 5.3%. Isn't that funny? How these things level out. But that's a median, right? It's not an averaging of all those things. Actually, probably if you average, the average of the app store is much higher because those outliers just contribute. That top 5%, that top 2% of MRR growth last year probably drives a huge chunk of the total MRR average movement, and that won't affect median as much. But yeah, I mean, that's winners and losers. The sorting machine, that's what Stripe called it a bunch in their annual report this year. Is the sorting machine. I don't know they didn't come up with that, but like these markets are just sorting machines, and they're going to sort the fittest to the top and the least fit to the bottom. And yeah, I mean, we've seen, again, I'll draw B2B, like we've seen just insane meteoric growth rates at the very tippy top of companies. Like Cursor just announced yesterday that added like $1 billion in revenue in a month, and that company, or in a quarter, and that company's only 2 years old or something like this. Just totally unprecedented. We're seeing that too in these AI apps, right? Like if you were the app that has the model that's the best, like you can just get numbers that never were possible before, because that level of differentiation was never possible before. Like you could be the best, whatever. Like I use my friend Flighty, the best like flight tracking app ever. I don't know if they ever, had that level, you know what I mean? Like, and stuff. It's just like you have this ability that if you've done the CapEx, capital expenditures to build one of these models, when you go to monetize it, it's truly better. I mean, that's why the CapEx spending is so crazy. It's because it's like the returns are there. I think unless Sam's listening or Dario's listening, or I don't think anybody should feel too bad if they're not in that top category. Like there's a lot of, that means half the apps are above 5.3. You're beating that GDP. You should be kind of happy about that in some way, right? Now, if you lost 33% last year, it's like, ooh. Maybe rethink your strategy.
Yeah, rich get richer, poor get poorer. I mean, that's just the way things
probably
go.
People with apps they've abandoned, right? It's 'cause you have to think about that too. It's like just because
I'm in that stat.
Yeah, if you have an app in this data set, you've written it off for whatever reason. You might just be moved on. It might just not be the best ROI anymore. So that's always in the data set too. So these are not like all strivers, right? These are not all apps that are trying necessarily.
I had a big launch in 2024 that did really well, and then we did not follow that up with marketing.
Yeah, I mean, basically, like treading water implies effort, right?
Yeah.
It implies like you're continuing to adapt and whatever the new marketing thing is and whatever the new features thing is. So.
But it is interesting that the top 25% of apps grew 80% year over year. And it's a bigger market, and there's more money. And so like there are more apps making more money than ever. And as concentrated as it is in those top apps growing 300% year over year, 25% of apps growing 80% year over year, like there's a lot of growth happening and a lot of apps making a lot of money. So
yeah, I mean, just think of the return on capital, right? Like even if you're spending most of that, I don't know how the economics of the Cal AI deal went. I thought David, you're trying to get him on the podcast. Maybe we can get some more details. But like, if you think, they probably, I don't know, or maybe margin break even the whole time, right? Just reinvesting in growth, but then you have a big liquidity event at the end. That's a way to monetize that all of a sudden and stuff. So it's like if you can in any way drive 80% growth, even if it's break even, like that's probably a good bet if you think you have something like with some amount of durability, which like a good fitness app it might be, right?
And with subscriptions, it's that compounding. If you have reasonable retention, the $1 million of ad spend this year, let's say you have the median retention, which is near 30%. We'll just say 30, I think it's 27. But if you have median annual retention and you spend $1 million here in March of 2026, then March of 2027, that's $300,000 in free cash flow. And I've talked to a lot of apps.
If you have a 1x like CAC to LTV or whatever, like
Yeah,
in the first
like
year
if
payback
you can
period,
profitably spend $1 million
or even break even
this month
in the first year.
right.
Yeah.
Just barely break even. That next year, that's just free cash flow. So
yeah, and then and those retention rates get better if the product is sticky. Is like, and you also build. I mean, there's all these like compounding things you build. You build a list. Right now, you have even all your churn customers become people you can market to, like more or less in perpetuity, and like and all of these things. So I think there's still apps, and this is maybe a meta thing, but like apps is like a venture target. It's still like a very rare asset. I don't think there's a ton of apps that's like venture capital is the right financing, but there's certainly still like good financial engineering that you can do to like grow these apps with capital very quickly, and it can pay off in some cases.
It was really interesting talking to Olivia Moore from Andreesen Horowitz, though. She's pretty bullish on consumer. I feel like it's
if you can make 100 bets.
Well, yeah.
Yeah,
It
right?
keeps going in waves. And what she shared and what we're seeing is some of these consumer apps are growing faster and exploding in ways. And, if you lump in some of these like Lovables and Replets and other stuff, a lot of that growth is actually consumer growth of people who are tinkering with these and playing with them and using them for those kind of things versus like not strictly B2B growth. So yeah, it'll be interesting to see though how venture capital, PE, and others treat consumer moving forward as the market grows, as competition gets harder.
I think probably right now, at least on the PE side, it's probably everybody's gonna wait a little bit because I just don't think everybody really knows. There's a lot of like B2B software roll up PE that's probably of questionable valuation at the moment. That might just be a January, February 2026 thing, but
I think so.
When growth curves are unpredictable, that's actually when venture should be playing, right?
Yeah.
But then when we kind of understand these financial assets a little bit better, that's where like lower risk portfolio builds like PE and stuff do.
And that's where I do feel like, and again, I talked to Olivia about this in the minisode we did, is that it is a blue ocean now of how do you rethink all of these entrenched consumer apps? Like what's the AI first Calm? And Calm's not necessarily going to be the one to build that.
You have to make the choice if you're that firm, right? You have to make the choice to reinvent yourself, right? And to probably break some of your precious eggs or whatever in the process. And that historically not always been the case that firms have like adapted.
And that's where 2026 and 2027 might be the years we see the next like ChatGPTs where launch this year and get to hundreds of millions of revenue in
Claude's on a run. Their Super Bowl ad paid off. Like they're like Anthropic's making a real run at consumer already. We thought this was like a one category by OpenAI.
AppFigures just shared data that the Claude app went from making like hundreds of thousands a month
a day. It was a day.
Day to over almost $1 million a day in revenue. So that just exploded when it seemed obvious that ChatGPT had won that market.
Yeah, I mean, consumers are. I will say like the ChatGPT app define the category, but that's rarely that the initial category definer remains. I mean, maybe not rarely, but it's not given. And if nothing else, they create space. So like, don't count, like there's a lot of great, you think of Perplexity, Gemini, like there's a lot of, these are probably categories that I don't know how many of our listeners are playing in. It's a handful of companies, but that same mindset can apply to every other niche where it's like, yeah, so-and-so's owned this category for a million years. But like, if you're a little hungry, you've got some tokens to burn and some ideas. Like, I don't know, go poke a bear. You know what I mean? See what happens. Like, why not?
Yeah, and for a lot of these apps, people are going to use multiple. Like, I have Claude and ChatGPT.
Yeah, I have a Claude Max. I have ChatGPT Max or Codex Max. I have all of them. So it depends on the day. What I want for each thing. Gemini, I have a Gemini subscription too. I have them all.
We just keep coming back to it. I think there's still so much opportunity, and
we should have a SOSA one year, David, where we get on. There's no more opportunity. Sorry, no podcast. That'll be you'll know there's no more opportunity when we've all paper hands this thing and we've all exited to private equity or whatever. That's how you'll know. You won't get a podcast.
Oh man,
humor. It's humor, David. It's jokes. It's fine.
So the next thing I did want to talk about is one of the key takeaways from the report. I think it's like page 4 in the report. Hard paywalls crush freemium on download to paid. Hard paywalls convert 5 times better than freemium. do 10.7% download to paid by day 35 versus 2.1% for freemium apps. Huge.
No day like the present. You know what I mean? That's my thesis on why that's so much better. But I'm surprised it's that stark, honestly.
This is a tough one because, I mean, I have a hard paywall in my app. I've talked to a lot of people who are moving to hard paywalls. This really does boil down to a strategy decision of, are you building something that's going to be a category leader where that freemium base is meaningful? Are there advantages to having that freemium base? Are they telling their friends about it? Are there network effects? Are there data effects? Is there a reason to have free users in the app?
Yeah.
And if not, I mean, a hard paywall does kind of make sense. And
unless you have a viral thing you're trying to do, or you want your brand to be. Yeah, I mean, I think this is not necessarily new. I think it's just become more standard practice. And I would say not doing this is probably becoming the exception. Unless you're just, it's a side project or whatever, then, you don't feel comfortable. Don't force yourself to do it. But if you're if you've got a good product, if you believe in it, if it's valuable, you think it's valuable, and you're doing spend, you're doing acquisition, I think unless you're very, very, very dedicated to it, I think it's worth considering.
For the right app, though, freemium can be super powerful. I did one of the minisodes I did was with Michael from Mojo, and their app does more than 50% of revenue not on the first day. And so we'll get to stats in this report, but most apps see 80% of their conversions on the first day, day zero, that people are opening the app. But he sees that as a superpower, is that they have a generous free tier. And so they do convert a lot of people on day zero, on that first day, but then they're able to convert a ton of people over time. And one of the things that he talked about in that episode is they're doing a paywall on launch for freemium users, and they're tasteful about it. They only do it once a week and stuff, but it's now instead of getting this one shot, you get somebody in, and if they retain and keep using the app, you've got a lot of opportunities to keep hitting them with oh, check out this free feature, premium feature, upgrade here.
There's probably, this is spectrum, right? It's not hard paywall or no full freemium, and you know what I mean. You can
and maybe even a phase. You launch hard paywall, and then you get the product where you feel good about it, and then you switch to freemium. So yeah.
I think your acquisition strategy should inform this probably more than just our one anecdote and stuff. But yeah, I've been saying on this podcast, David, since we've had a podcast, people undercharge. They don't believe their stuff's worth it. They have imposter syndrome and all these things. They think everybody's gonna get mad at them because they didn't give them something for free. Look. Always. I was having this debate today about stuff in RevenueCat and us charging for it. And it's look, they could just not have it. We could just not make it. Is that better? What do you want? So I think it's a thing that this is a first time, second time founder thing too, but some people are just super sensitive about it. And also just pricing is so transient. People don't if you try it and people don't like it, you can just roll back. Nobody's going to know, it's fine, but it's definitely something to try.
I wanted to have this conversation and be a little more nuanced, because if you go look at the report, it's oh, hard paywall is obviously the thing to do. It's going to make me 5 times more money. Well, maybe.
Just paste SOSA into Claude and just make more money. Make no mistakes, I don't know. That might outperform a human overthinking it, right? Let your bot do the overthinking. But I think it falls into the same category as everything. David, there's this make it a good report, and then there's all the nuance, right? It's maybe doesn't fit in the report always, but I don't think there's any. I think the data is true. And there's just this this is in life and software, there's no time like the present, right? When somebody's in your app and they're using your app, the cross section of intent and numbers and everything is usually just at its peak. So make as much hay out of it as possible, because 7 days from now, even if your app is great for them, they're not going to care as much. So maximize that moment.
And that's the thing about freemium, is that people actually have to retain for them to open the app and see your paywall again. And so,
yeah. You have them now. You're gonna miss a shot. You're gonna lose half of them in a 50% day one retention would be great. So you're gonna lose half of them tomorrow, And again, it's like they've already crossed a lot of chasms to get to you. They searched, they had intent, they downloaded, they opened, they went through your onboarding, right? You're never going to have them as primed and as jazzed about your product as they are right now. So like capture it.
On the hard versus soft paywall, or hard paywall versus freemium, the one thing I was surprised is that retention on the hard paywall was right in line. I mean, a little lower than year one retention for freemium. So, I kind of would have guessed, an app that forces you into the decision day one and you can't even use the app. I would have assumed human meatbag intuition, like those people will probably churn at a higher rate because you like force them into the decision, but it's pretty equivalent. Like the P90 retention on freemium is 58%, and for hard paywall, it's 54%, but the median is 27.7 for freemium and 26.8 for yearly, a kind of a wash in the median. So you're not sacrificing retention each app is going to be different, but in aggregate, people aren't sacrificing retention by doing a hard paywall.
It's actually a little bit non-obvious to me that I wouldn't move it, but because usually anytime you like change something substantial, it's going to move your mix, but there's probably two forces there. I'm not going to speculate, but there's probably one that increases and one that decreases, and they're just balancing each other out would be my guess. But yeah, it's free money. Just do it. Free money.
All right. The next thing I wanted to talk about was the window to win a user is closing. 55% of all 3-day trial cancellations happen on day 0. This is another chart that when you look at it, it's just
it's
massive
stark.
concentration, just stark. That
it's a flip side of the same point we just made, right? Which is like, most of the things happen in that first day, including them canceling your trial, right?
Yeah, people start that trial and then immediately go turn out. This has been a growing trend. I don't think we shared year over year numbers here, but I believe it's been a continued trend that this goes up every year. That more and more people,
consumer savviness, right?
Yeah.
More Apple's also been more better about like sending out notifications and things. But that makes sense. I mean, good, good. Good.
Yeah,
I love an auto renewing trial. Auto converting, it's great for app developers. It's seamless for consumers, but also I think if consumers are opting out, it's good too. Let them do it.
One little tactical point. I talked to Anmol from Duolingo in one of the mini-sodes, and he said Duolingo had been experimenting with that trial reminder, kind of the Blinkist trial reminder paywall, where it's, hey, we'll remind you about the trial so you can cancel it. Well, now Duolingo experimented with letting people choose what day they want to get the reminder on, which draws attention to, hey, like we're going to remind you about this free trial. And so they saw a conversion uplift from that. So
yeah, I mean, you're getting people to not cancel on day 0.
Yeah,
that's what you're doing. I think. I don't know.
But then you're reminding them. So maybe the notification gets lost or whatever. But
who knows? Who knows? These are consumers buying at willing prices, David. That's interesting. I mean, it's certainly a good look. I'm still a big fan of the Blinkist paywall. I think in the reminders and stuff. I think it's a net brand positive and trying to trick people.
All right, next thing is Google's $1 billion leak. Not a huge fan of that framing. It is what it is. Google Play is a very different platform with different consumers, with different forms of payment. But it is really interesting that nearly a third of all subscription cancellations on Google Play are involuntary billing failures.
Yeah, we see this all the time. The customers being like, why am I getting so many billing issues?
Yeah.
I don't know exactly. I couldn't tell you exactly the reasoning for that. I don't know if it's just like economics of who owns Androids. I don't know if it's like the way they do this.
Some of it's payment method, because Google will let you
use prepaid cards and stuff like this.
Exactly. And so then your balance runs out and then the billing fails.
Yeah, the physics are just very different. There's not an auto recovery path like there is on iOS. I mean, there's just a whole number of reasons. It just compounds the fact that makes like Android. So even if you still see like, whatever, I don't know what our blend is, but it's 10-15% Android revenue versus the rest iOS probably and web. But like, you see why. It's not just a market's not there. It's like also the bucket's leakier, the conversions harder, and stuff. I'm good on Google for putting in a good fight, keeping it going. We need two platforms. But yeah, it answers your question about why people are continuing to increase their iOS concentration from earlier.
As I was researching this, Google did share in one of their developer pages that folks who turn on grace period, and there's another feature, I don't remember it off the top of my head, but you need to be, especially on Android, you need to be thinking about this.
Managing this problem. Yeah. Well, there's also communication things you can do, you can support, and we have good hooks for this in RevenueCat to make it easier. You should do all the things, right? Especially once Android's beyond just experimental revenue for you.
And it kind of makes sense. The Apple platform is way more oriented around keeping your credit card up to date. Everything is Apple Pay. You've got your Apple subscription to keep your photo library in the cloud. It feels like as a platform, they do kind of more strongly incentivize you to keep your billing updated, keep money flowing through their systems.
It's the whole benefit of having a great retail partner, right? They make the buying experience good, they keep consumers coming, and you're willing to pay a fee for it, right? So,
and then speaking of churn on Google Play, we did include an interesting chart about the reasons for cancellation. So there's actually an API that we call and get this data from our customers, because Google asks when you cancel in Google Play, why did you cancel? And then we're able to get that data and then aggregate it. And so it's interesting. The top reason is cost related, and it swapped back and forth. I think last year it was maybe not enough usage, but
are those not the same answer though? You know what I mean? It's not enough usage to justify the cost, right? They're sort of interrelated reasons, right? So I wouldn't necessarily read. But
if you combine the two, that's a good point. If you combine the two as a value proposition, I'm not using it enough to be worth the money, that's 70% of cancellations. So it makes sense.
Economics, people stop paying for stuff they don't want.
Technical issues is small, found a better app is small. So you're more likely to lose a customer because the value prop is not there than you are because they found a different app that solves that need.
App developers tweets, is that on there? No. No. Okay, good.
All right, back to AI apps. So AI apps sell, but they don't stick.
So this is interesting.
AI-powered apps generate 41% more revenue per payer, but they churn 30% faster. Year one retention is 21% versus 31%. That's interesting. I mean, it does feel like there have been so many generative AI apps launch, and some of them are, the Studio Ghibli, when that exploded for ChatGPT, but a bunch of other apps jumped on that bandwagon and released apps.
I think it's most of these have not solved the building stickiness. ChatGPT, I'm going to throw them under the bus a little bit on this. It's they have memory, but I don't feel super invested in my ChatGPT app history, right? I open it, I run a query, it's whatever, and then it's transient. Codex is a little bit different because I'm building sort of my Codex workflows and things like this, but that's a very niche thing. And I think this is one of the things that OpenClaw kind of blew open, which was just give this thing more stuff about you, right? Give it more integrations, give it obviously give it more power is helpful, but I think even OpenClaw as an example, at the end of the day, it's a bunch of integrations and skill files, which are fairly transferable, right? And that's on the agent side. But I think we're just in an emerging market where new products are coming out every 3 months and people are willing to shift, and there's not a huge lock-in effect. Now you've seen, I think of the ChatGPT, OpenAI's been pushing their medical thing. They're bring all your medical history in. Now, and obviously one, I think will be a very useful feature. But then secondly, it serves a purpose for them of okay, now if OpenAI I have my Epic chart, whatever is linked to it, and has all my medical records and all of this stuff, I think you start to build those. But it's going to take a while. It's going to take a while for these products to really figure out what they're sticky, let's assume we hit some sort of terminal model functionality at some point. They're going to need to innovate on more of the consumer features.
I think it also just shows people are willing to try stuff. There have been so many new AI powered apps launching, to do this photo manipulation.
Oh yeah, I'll sub to
do
anything
that
right now if
thing.
it's novel.
Yeah.
New photo thing, new audio thing, whatever. I'll try it.
So
$20 a month,
it's a good
whatever.
sign people are willing to try stuff. But AI apps do need to figure this out for the long haul to get those sticky use cases.
There's the long tail runs. I don't know if you're building, but I think you actually have a better. If you're doing an applied, you have a very different problem. You're let's look at your Strava as an example, or a Strava clone or something like this. You're still building a data moat of stuff. And I think this is it's an interesting, I think that there's a lot of discussion going on, where's the defensibility in software? Because one, it's cheaper to make software and all this stuff, but there's still a tons of defensibility in that long-term customer relationship. It's Dropbox has all my photos, Strava has all my workouts, all of these things, right? And those can't be vibe coded in a weekend. You're actually in a stronger position than these brand new, and also mostly stateless AI tools that, I've had better stickiness for my little personal OpenClaw deployment just because I can modify it and I'm building an empire inside of it of things it can do. Not so much in my chat GPTs and things like this. So yeah, it doesn't surprise me.
All right, another hot take that deserves a little nuance. Trials of 17 days or longer convert 70% better than short trials, 42.5% versus 25.5%. But year over year, more apps shifted to 3-day trials. So this is one where, and I've talked to Rick about this, I think this is a correlation versus causation kind of thing. Will you get better conversion if you have a longer trial? Maybe. It's worth trying. But I don't think you're guaranteed that. And the thing about 3-day free trials, the reason people do that is cash flow. You brought that up.
You want the money in 3 days. You don't want the money in 30 days, right?
And getting conversion data faster to compound experiments you're doing on onboarding and paywall and everything else like that. So it's tough because yes, in an ideal state, maybe everybody offered 14 days or 30 days or whatever. And the data shows that those longer trials convert better, but
it could still be a net loss if you're having to if you're losing that information flow, you're losing that cash flow, you're losing all those things. You get to eke out a few points on conversion rates. It might not be worth it.
Back to what we were talking about earlier with the day zero cancellations. I mean, that is probably part of it, is that when you have a 14-day free trial, it's 17 plus, meaning 30-day free trials. It's there's a little bit more of a I've got plenty of time to check this out. And you don't immediately go turn off auto renew because you're I'll remember to turn that off. Maybe that's some of it, just that. But I think there's probably a bit where the apps that are giving 30-day free trials are different kinds of apps than the apps that are offering 3-day free trials.
Some selection bias, right? And then just apps too that are, if you're spending a lot on ads, you're probably less differentiated. I don't know if that's true. It's not because you spend on ads, but if you're in a competitive market, you often need to. I think everything in the SOSA report is worth considering some of those dynamics. We can't fully separate causation and correlation. So it's perfectly plausible, right? Which is why, going back to nuance is why you should never take one of these single data points and treat it as gospel, because it's going to be different for your app,
Run your business on it. All right, two quick hits as we wrap up. We shared a really cool word chart. Is the distribution of paywall call to action language. So we shipped our paywall solution. Well, we shipped our first paywall solution a couple of years ago, but we've been accumulating all this data now of what people are actually using on their paywalls. And so you look at this word chart. Continue is still the biggest. Subscribe is the second biggest. But you got a whole bunch of this is a fun chart to just look at for CTAs.
What are some good ones? I don't have it in front of me, David.
Redeem offer, get premium, get started now, start for free, go pro. There's just a ton.
I want to look at the long tail. Those are the ones that lots of people use. We should look at the ones that very few people use, because
I was reading some of the little tiny ones.
No, the one-ups. Those are probably the weird ones. But
the one I'm not seeing in. Oh no, it is in here. It's one of the smallest ones. But try for $0.00. I talked to the chief product officer at Duolingo on the podcast, and that was released back in I think January. And he said that was a meaningful lift for them. And try for free did not convert as well as try for $0.00.
Looks like you got a bug.
But anyway, it's just another example of how the 2026 report is better and bigger than ever. Like this, it really is fun to see this word chart and look through all these different words and phrases in there. The last one I wanted to touch on was the cancellation timeline for annual subscriptions. This is really cool. And we've shared this in different forms over the years, but I actually really like the visualization here.
Yeah, I agree. That's a good way to look at it.
What it shows is for people who ultimately churn, when did they turn off auto renew? And when we first pulled this data years ago, it surprised me. I think we've talked about this on the podcast before, but I always expected that for an annual subscription, you would see a large portion, if not the majority of people who churn right before, in month 12, right before it renews. But no, 34%, this is across all categories, 34% cancel in that first month and only 11%. So there's a bump because month 11 is 4.7% and it bumps up to 11%.
Lows, and then like right at the renewal time, like people churn out
But
again.
it's not like a U, it's like a J, but like a tiny J curve. I just had always intuition would have expected this to be way higher. But anyways, what this says is that people are turning off auto renew when they see that charge hit the credit card or, soon after. They're making that decision sooner rather than later. So just like we're talking about with day zero free trials and getting people to retain and things like that. It's like, you got to make your impression soon because people aren't just sticking around and making that decision at day 364.
I was just jazzed about the visualization. I thought that was like finally we figured out a way to make it not look dumb and hard to read. So we're innovating over here, wait for the
innovation.
Fifth SOSA report. It's going to be even better.
Yeah.
No, the problem is that this is the ideal, and next year we're gonna try something worse, but that's okay.
But do we even need visualizations in 2026? You're just gonna dump this report into Claude Code.
Oh yeah,
and have your agent tell you what's important from the data.
We're supposed to plug this. But yeah, I was just thinking about this. So it's one of the inputs. So we're working on some cool stuff here. Like we've talked about AI stuff, but we've been hacking on RevenueCat's own agent internally, which I'm workshopping right now. I don't know if it'll announce this, but it's Revenue Intelligence Copilot, Rico. He makes you Rico. I'm more excited about that than everybody else on the team. So we'll see how we actually ship it.
I didn't know it was an acronym, and I thought Rico was kind of goofy.
But no, it's Revenue Intelligence Copilot. It just happens to also mean rich in Spanish, which I think is funny.
Right.
But yeah, we've built I think a lot of people in the community have kind of hacked this together, which is like pulling your RevenueCat data and maybe some other stuff. We want to bring this to like a first party feature into the RevenueCat platform as we like figure out like what does it mean to be a system of record, in the future. And I don't think there's any there's not going to be any vendor our customers have they feel great about that doesn't have like well-built agentic interaction like built into it. And so we're figuring that out. I'll be honest. We're mostly a JSON and databases company, so this is like all new territory for us, but it's not rocket surgery, as they say. And what we've seen this thing produce, I mean, David, you've used it.
It's really fun.
Yeah. It's great. It's a fun way to interact with it. It also can just do things that everything you can do in RevenueCat is just what the agent can do, but it's just faster. It can click faster. It can pull data faster. It adds a little bit of color, which maybe isn't even the most valuable part. The most valuable part is like it can just pull the charts a lot faster than you can, right?
Yeah. So currently we've been using it internally as a Slack bot where you can just ask like at Rico, how was performance last week? But what's cool is like you hooked up last year's report and then you're going to have it ingest this year's report.
So SOSA is integrated automatically.
Yeah, the reason I wanted to bring this up is because I was going to suggest people just drop the report into a Claude project and then bounce your data in, ask it things you should be thinking about, use it in a project in Claude. But like for RevenueCat customers who enabled this feature, once we release it, that works out of the box. Like you just say like, how does this compare? What things am I weak on compared to the report? What things should I be thinking about? And it's pretty smart.
Yeah, these models are great. Nothing to do with us, RevenueCat. It's all just like we just gave it this stuff. It's actually a good idea. We should note this but we should release like a markdown version of the report. That'd be easier for people than dropping just like a raw PDF in. But yeah, I'm super excited. I mean, I don't want to plug too much of our book, but like we're like awakening to how we can make RevenueCat more AI powered and sparkly. And so Rico's kind of this first kind of this first iteration we're hoping to ship. Ideally, maybe this is out before the podcast drops, but we're still like putting some finishing touches on it. But we're also working on like how do you agentically interact with paywalls, like how do vibe code apps or vibe coding environments like create paywalls and stop having to like click all the time. Basically, like in 2026, we're tired of clicking. No more clicking. We're typing. No more clicking. Maybe talking, but we're not clicking on things anymore. And then also like we have an open claw skill, which you can use on you can use it in Claude as well. Like we should get it on the Claude marketplace as well.
Yeah, I think we have a chat GPT plugin now as well. Like it's so fun internally because people just build this stuff and like I don't even know all the stuff we have.
Yeah, and we're adapting to this new world, and I think we're just getting started. So hopefully that's live by the time this drops. If not, stay tuned. We'll find out 6 days.
Sign
from
up
now.
for the beta.
So, yeah, for sure.
All right. Well, I think it's a good place to wrap up. Drop the report into an agent and just have it tell you all the things. And,
you don't need to listen to this podcast. You're probably not.
Listen all the way to the end.
You probably had your agent summarize it. Is giving you the digest.
Yeah.
So. But anyway, if you have listened, it's fun. These are one of my favorite ones we do every year, David. So.
2026 is a weird time.
It's a weird year. It's the weirdness shall increase until morale improves, I believe. So everybody buckle up. I don't think we've hit peak weird yet. So,
well, I did want to shout out the team, Peter and Lorelai and everybody else who put in so much work. It was a huge group effort, Baran, and we had a contractor working on a lot of the
I know things
stuff.
must be going well at RevenueCat when every year I hear less and less about it. So, you know what I mean? The first year it was like a whole team effort, and now it's like it's still a lot of people involved, but like it's operating much more efficiently.
Yeah, the first year it took so much more of the small team that we had. Like as a percentage of all work done at RevenueCat,
we pulled in the ops
massive
team and like all this other stuff. Yeah.
Yeah, and then now it's like as we've grown, it was still a massive effort, but as a percentage of all the work getting done at RevenueCat, it's much smaller.
So dear listener, we do it for you. You know, we're like investing our finite resources and then putting this report together, and I think we're really proud of it. So.
Yeah, it turned out great. And so yeah, you've probably already downloaded the report. Check it out and
we'll see you later.
Yeah. Thanks so much for listening. If you have a minute, please leave a review in your favorite podcast player. You can also stop by chat.subclub.com to join our private community.